Is PayPal becoming irrelevant? That's the question I'm going to try to answer in this video. And to do so, we're going to take a look at the annual report and see what the numbers tell us, but also see what the company is doing in terms of its executives and what changes they are making there. This is Growing Quality. My name is Elian. Now let's get me out of your screen and go on with the video. Let's start at the basics, because what companies fall under the PayPal suite of products? Because PayPal operates multiple checkout companies. So we have PayPal, Venmo, PayPal Pay Later, PayPal Credit, and Paydi. Now, you might not be familiar with Paydi, and that's good reason, because Paydi is a buy now, pay later platform from Japan. PayPal announced to buy this company in 2021 for about $2.7 billion, as the acquisition was part of the now abandoned super app strategy. And also, let's look at PayPal Credit and Pay Later, because this might confuse a bit as to what the differences are here, because I had to dig into it myself as well. And the easiest way to think of it is that PayPal Credit is more of a line of credit, a short loan that has no interest for the first 6 months, but PayPal only wants this for loans over $99. Now, PayPal Pay Later is more of a normal buy now, pay later platform, which allows you to defer your payment for a short period. As for processing, here are two options. This is PayPal and Braintree. And Braintree might be somewhat unfamiliar to you. This is a payment processor that PayPal got with the acquisition of Venmo. So what are the differences between the two? Braintree is more geared towards higher volume e-commerce customers, whereas PayPal is more geared towards companies with modest e-commerce needs. Braintree does have lower standard margins than PayPal, and I've seen many people contributing the lowering margins of PayPal towards the growth of Braintree. Braintree has a standard fee of 1.9% plus 30 cents per transactions, compared to 2.9% plus 30 cents plus $30 of a monthly fee for PayPal. It is important here to say standard fee, because companies like Uber, for example, which is a Braintree customer, get other rates. Here we immediately have the first bear case of the company, because these payment fees are coming down over time. The take rate went from about 3% in 2015 to about 1.7% in Q2 of 2023. In the latest earnings call, the new management team acknowledged this statistic and signaled to be working on it, mostly in the short term by trying to convert as many people as possible to higher take rate products, such as branded checkout, and towards the debit and credit cards. Now, under the digital wallets, we had PayPal and Venmo credit and debit cards, but also crypto, for example, as you can store your cash or Bitcoin in the wallet. So now that you know what the key revenue drivers for the company are, it's time to see what the key performance metrics are that PayPal looks for at its business. TPV, or total payment volume, is the main KPI the company uses. Besides that, they also look at the amount of payment transactions and the amount of active accounts. We can already see how these numbers stack up year over year, and we can see a good increase in total payment volume and total payment transactions, but slightly lower amount of active accounts. And the accounts that were lost are supposed to be mostly lower quality customers from Latin America, and PayPal has already said it doesn't really care that it's lost these customers, as they want to focus on high quality customers. So what is the strategy PayPal will follow in order to grow? They will increase their core business, increase the amount of customers, and their engagement with the products and services. They will expand value propositions for merchants and customers by forming and expanding strategic partnerships. They are seeking new areas of growth, basically trying to come up with new products and suck users in even further. So now let's go into the numbers. Revenues are up 8% in 2023, and this was primarily driven by an increase in total payment volume. As for operating expenses, these were up 4%, and this is of course something you want to see. Revenues increasing more than costs. The increase in expenses was due to an increase in transaction expenses, partly offset by reductions in sales and marketing, tech and development expenses, as well as restructuring expenses. Operating income increased 31%. This comes from an increase in operating margins to 70% from 14%, but also the sale of a divested business, as in happy returns, and partially offset by negative impact of the increase of transaction expenses. Now, the 4% increase in operating expenses does not paint the full picture, but I will come back at this at a later point. Revenues can come from two components. These are transaction revenues and revenues from value-added services. In the case of PayPal, both of these increased in 2023. Revenue from value-added services are revenues earned from partnerships, referral fees, subscription fees, and gateway fees. but also revenues created from interest and fees earned on the portfolio of loans receivables and interest earned on money that is stored in the PayPal platform. The transaction revenues can be broken down to 4 key metrics. These metrics are the total active accounts. This number is 426 million in 2023, down from 435 million in 2022. Now again, as PayPal says, the loss of accounts is mostly lower quality accounts and they didn't mind losing those. The number of payment transactions increased 12% year over year to about 25 billion, up from a little over 22 billion. And this is significant as the company now has less active users but more transactions, as well as a higher total payment volume. This increased to $1.5 trillion, an increase of 13% year over year. Now the final stat is the amount of transactions per active account, and this is quite an important one because it means users are more active. Now as you can see, the number of payment transactions per active account went to 58.7 from 51.4, an increase of about 14%. Now this is quite a sizable increase if you ask me, as the company didn't really innovate anything and still managed to grow the number of payment transactions per active account by 14%. As the company starts innovating, I can see this number actually go up even faster. Now, as I said, I would give a little bit more color to the 4% increase because that picture is not quite as pretty as it seems. Transaction expenses increased by 18%, and this came from the combination of a 13% increase in total payment volume, as well as an increase in customers using unbranded card processing, which typically has higher expense rates. The increase in transaction costs was offset by a 20% decrease in sales and marketing costs, along with 9% decrease in both customer support and technology and development expenses. Finally, restructuring costs went down as much as 141%. This seems a bit strange, but it can be explained by the fact that the company has sold a divested business, as in Happy Returns, for a pre-tax gain of $339 million. Now this was offset by restructuring costs. That the company has let go of a bunch of employees is no secret, and this is best visualized by this chart from Qualtrim. The company peaked in number of employees at the end of 2021 when it employed 30,900 people. By the end of 2022, this number came down by 1,000, and at the end of 2023, this number was at 27,200. In the layoff round of 2023, the company estimated to save about $280 million in salary costs, and this included $85 million in stock-based compensation. This was not the last round of layoffs the company has done, as it announced another round in January of this year, where it seeks to reduce the headcount by another 9%, or about 2,500 people. Even this may not have been the last round, however, as the CFO, Jamie Miller, has recently signaled that further leaning out of the business can be expected. So let's talk about the 2 bullish points regarding PayPal, starting with the buybacks and then the management shakeup before giving you my conclusion about this company. Now, during 2023, PayPal bought back $5 billion worth of stock. The company does, however, give out a relative high amount of stock-based compensation at $1.5 billion. This seems less than ideal, but I'll get back on this later, because doing this amount of buybacks has resulted in the company buying back about 4.5% of its outstanding shares. Doing this amount of buybacks has resulted in the company buying back about 4.5% of its outstanding shares, and doing such aggressive buyback will decrease the share count, which means that the income that can be contributed to each outstanding share will exponentially increase. This has also been a large part of Apple's strategy, and why they can grow their EPS numbers in the way they do. Now let's highlight the 2 executives that will be most in the picture during the turnaround of PayPal. The CEO Alex Chriss and CFO Jamie Miller. Alex Chriss has been highlighted in many videos previously by other YouTubers, so let's keep it a bit shorter. Alex Chriss has climbed the ranks at Intuit to become the Executive Vice President of the Small Business and Self-Employed Group. The experience Chris got here is what he wants to leverage in his function at PayPal, as he sees this as one of the main pathways for growth. Now, Jamie Miller is less covered. The new CFO since November 6th has previous experience in various roles at GE, the latest being Senior Vice President and CFO. What stands out in this resume are 2 things. The first being that she's on the board of Qualcomm, a company with a market cap of almost $200 billion. The second being her tenure at EY. At Ernst & Young, Miller held the position of Global Chief Financial Officer for 6 months before leaving the company. Now, this is of course a very short period of time that she worked there. This was explained by the fact that she was hired in order to spin off the global consulting business. So when that plan was wiped off the table, Miller left the company in order to pursue other opportunities, which led her to PayPal. So let's finish off with my thoughts. PayPal represents an amazing investment opportunity with many risks. I'm quite biased here, as I have about $20,000 invested in the company, with over 300 shares in my private portfolio, and an astounding further 1.25 shares in my freshly created huge portfolio. I know this is tiny, but if you look at the weekly update videos, you can see the thoughts going on there and why this position is at this size. So what do I see? Alex Chris is pulling every string he can in order to turn the business around. And the company has good financials. Transaction expenses are increasing at a more rapid pace than wanted, but this can be offset by lowering and reducing other costs, as the company has been doing quite successfully and they will do in the future. Now we can also see the net income per share. This has gone up quite a bit from 2022 to 2023. And of course, this is not a sustainable rate, but I suspect that the company will keep growing this at a very healthy pace. What I also very much like at what Alex Chris is doing is that he's hiring an entirely new executive team. Because besides him and Jamie, he has hired a new chief technology officer, a chief people officer, executive vice president of the newly created small business and financial services group, an executive vice president of the newly created consumer group, new president of global markets, chief marketing officer, chief corporate affairs and communication officer, and most recently, a new chief enterprise services officer. So Chris is building an entirely new team to improve the business, and while doing so, the company buys back an amazing amount of stock. As they have already said, they will spend at least $5 billion on buybacks during 2024, and probably about 80% of free cash flow. On top of that, the team is pushing incredibly hard to innovate. These may not be some silver bullet groundbreaking innovations, but the company has a lot of catching up to do. Some investors got the innovation event in January underwhelming, and this is also what the stock market said. However, in my opinion, the innovations could really stack up with little improvements. The problem with the announcement was that it was going to shock the world, but only shocked investors' wallets, for now. The stock does have a fair share of trust to regain, as in my opinion, it trades at a 12.5 forward PE and a 0.5 PEG ratio due to a lack of predictability. In my opinion, this is also for good reason, because the company has become questionable in recent years due to the acquisitions it did and the falling earnings. Now it is up to Alex Chris and his team to rebuild this trust brick by brick and to bring the company back on the right track. I want to thank you for watching my video on PayPal, and maybe now you can draw your own conclusion on whether PayPal is becoming irrelevant or not. Now if you haven't done so already, please remember to like and subscribe, and check out my videos on the weekly updates to follow along with my YouTube portfolio.